Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. Okay, guys, I want to do a little wrap-up video for you by the end of the week. Tuesday, we had been talking about how we were dangerously close to breaking this symmetrical triangle, and we actually did. Let me get to this chart here. There it is. So we did finally see the break. Hope you guys were ready for it. Had our levels in place. We talked about aggressive levels below 11,950, 11,9. But really it was, 11.8, 11.7, 11.6, down in those areas. Break of 11.8 made you money. Break of 11.7 might have made you money. 11.6 never happened. 11.7 probably not. We didn't get much further beneath the 11.7 mark. But the 11.8, which was definitely the place to get short, worked out pretty well. Point is, we broke the symmetrical triangle finally. This consolidation finally gave way. If you guys were patient enough to wait for it, you made money on the trade. Good for you. Today, we saw nothing. It was just a wandering sideways, ho-hum day, and finally finished up. I'll need to tweak these lines a little bit, but we basically revisited the bottom side of this particular line, turning it now into a resistance line, and stuck below the 20 period or the 200 period moving average. I gotta say, at this point, I still like the move to the downside. I would count this as maybe a 1, 2, 1, 2, 3. This is some sort of a consolidation 4. We could go up a little bit further, but I really like this move more towards the downside. It looks very, very nice on all of the charts. So I want to get you guys kind of focused on what to look for coming into next week, and that is breaks back below this area. I'd say if you can get something below 11.6, that's a really good trade. That's your next entry here on the Dow. If we blast upwards for some odd reason, I'd say don't do anything until we can get back above about 12,000. That'll be the first mark to be watching as we push our way now towards the upside. So 12,000 long. From a daily perspective, here's that triangle, consolidation and a break of the 20-day moving average. That was Wednesday. Then Thursday, Friday, continued our push down. You can see that here. Kind of see that little triangle in your head. Broke that to the downside, holding there very nicely. Yes, this could be a potential bullish harami candle, but right now for me, you know what, guys? It's a nothing. It's just a regular candle. Left is kind of in limbo coming into the weekend, which the markets love to do on a Friday. Are we ready for a 3 down? Are we ready for a 3 up? It's anybody's call. I really do like the idea of further downward action. 11.6, then 11.5, then 11.4 are all your next lower areas to be watching on the Dow for next week. NASDAQ finally broke this range. Stuck between 23 and 2400. Talked about this for a long time, going back to, I don't know, middle of October. Just consolidation straight across the board. If you're a day trader, it's good moves. Opportunities to make some money in here, both up and down. Swing trader, holding for the long term, yeah, not so much. Really didn't do so well. Breaks of this down here gave you great opportunities to the short side. Hope you guys were able to catch that. You'll see here on the break of the 2300, 2290 mark, really wanted it below the 200 day. Once we got that break, bombs away, you were able to make money. Once again, a $30, $40 trade, 30, 40 point, I should say, trade on this particular move. We not only broke the 200, we broke the 50 and have held below that for the last couple days. So the NASDAQ down a little bit further than the rest of the markets today. And I'm loving this 22, 22.10 mark. This is about 22.20, I think, actually, right back here. I'm loving this move. This would be definitely one of the lower areas to be watching very closely on your charts coming into next week. I'm not a big shorter of the NASDAQ, but in this case, if you like to play the cues, this is where you want to look for it. Back below 2250 into this 22, let's call it 2220 area. Here it is on the weekly. You can see we tried 1, 2, 3, 4 times to break the 50-week moving average. Could not do it until this week. Finally, the pressure was too much. That was also a break of that 2290. Starting to see a clearer picture here. Beautiful entry to the short side, making you 30, 40 points. Also below the 20-week moving average by the end of Friday's trading. Still 11, 22, 20 or so coming into next week on the next further move. Keep in mind that even though we're moving downwards, we haven't really broken anything from a bull side yet. It's not as though everything's busted up and we're headed our way to Hades. Nothing of the sort. I'm actually expecting us to maybe pull back into one of these areas here, stop, turn around, and see a little push to the upside coming into and through the Christmas season. SPX 60 minutes, same thing, 1, 2, 3. This looks like a consolidation 4 before a further push to the downside. The move here was beautiful. Okay, let me show this to you. I don't have the lines drawn in here, but our move was below 1230 or above 1280, and once we hit that 1230 mark, it was bombs away. We came down into 1227, kind of rested, and then plop. Once this thing got acceleration, stops were hit, bulls recovering, selling was accelerated. It was a beautiful thing to watch. It is so much fun, especially if you're on the right side of the trade. Let me preface that. If you're long at this moment and you see these big wicks down and it's just down, over and over and over, the blood rushes from your face, feel a little pale, feel like you're going to throw up. Listen, guys, that's common. That's common. That's why stops are so necessary. I can't stress that enough. And I pound it into my students' head. You got to use your stops. But if you're on the right side of the trade, it's just like, go, baby, go. It's nothing but smiles. And that's what happened here. This huge move down really ran hard, really ran fast on the SPX as the financials completely fell apart. Here it was Tuesday, here it was Wednesday as we broke the 20-day moving average. That was the more aggressive entry here below 1240, 1245, then the 1230, then down here to rest right at the 1215 mark. See how we've already broke this lower end of support? We are so close to the 50. I'd be very surprised if we didn't reach the 50-day moving average over the next couple days. Look for that to maybe happen Monday, Tuesday. And I would love to see this thing leak its way down into the 1190, 1180 mark. That would be my lower target for this. And we could see that conclude by the time Thanksgiving gets here. So be watching that very closely. Anyway, looking for that touch of the 50-day moving average coming into next week. VIX was down for the day. This is very interesting. So the markets were basically break even, but the VIX was way down. 7% is a huge move on the VIX. This is the only caveat that's still kind of got me a little bit bullish coming into next week. And from a weekly point of view, now we did well. We're up 6.5%, but that daily VIX has really got me factor there. That's a huge move on the VIX when the markets go nowhere. So that one's got me a little. I have to study that one a little bit more over the weekend here. FAS had some great moves here. Below 63 for the short. Oh yeah, I hope you guys were listening Tuesday. That turned out beautifully. A good $4 or $5-ish trade or so by the time it was all said and done. The total move was $7, $6, but you're not going to catch all of that. You never catch the top and the bottom in most cases. So if you pulled $3, $4, $5, you did really well on this trade. Keep in mind, this looks like a consolidation. Further breaks below that 56.50 mark. Another good shorting opportunity. From a daily, it was sitting here on the 50-day moving average. This was the spot. It doesn't get any more cherry than this, for me anyway, in my trading. Break below that and away we go, right down into where? Beautiful support. Yes, you can go back in my videos and see that this line has been drawn in for quite a while. It's funky how it works. Actually, there's good psychological reasons why these lines work the way they work in my charts. So anyway, didn't surprise me at all to see us run back down in here and stop for a little bit. So here we consolidate, waiting for that next further push, and that's below that 56.50. On FAZ, we were in that same symmetrical triangle. Love this thing up above 44, and that played to 46. So another nice trade. This also looks like maybe a 1, 2, 3 consolidation, 4 pullback before a 5 to the upside. We could still pull back a little bit further. Actually, it wouldn't ruin the formation by any means. But at first glance, that's what it looks like. So it looks like there could be some more upwards action in FAS or FAZ, which would mean more downwards action in FAS. Keep that in mind, depending on which one you're going to prefer to trade. I really would recommend you don't do anything with FAZ until we get back above 48, 50, 49. I'm going to say 49. That's probably the safer trade here. Keep that in mind as we roll into the new week. Love it as well above the 200. This was one of our targets as we break the 44 mark. I said the 200 would be a beautiful place to take profits or get out, and it worked out to a T. This is gorgeous TA. It just doesn't get any easier than this. So above 44, right into the 200 was the call, and it worked out very, very nicely in this case. It doesn't always work that pretty, but this week the markets moved really, really nicely. It was a wonderful week for trading. I hope you guys were able to pull a little money out of the markets. Okay, you've got your new levels, you've got your new ideas coming into next week. I'm still looking at a bigger Elliott wave count. I've been stuck on this Elliott wave count now for months, and I thought maybe, wow, maybe it was a little bit out of reach now. But with the latest action, we're right back in it, and I love the count, and I think it's strong coming into the end of the year. So, if you want to know what it is, guess what you got to do? Yes, you got to sign up for my newsletter. Give it a whirl. 28 bucks a month. That's a buck a day. Come on. If you like these videos, it's packed full of information. We cover a lot of stuff. It's every day except for Saturdays. It's all about the indices, including the Russells. We talk about gold. We talk about oil. We talk about how to trade gold and oil. So we have those trades in there as well. I give individual stock plays. Like, FAS and FAZ, I do Apple. And then I usually go through and scour my charts for 2, 3, 4 other really strong trades I believe are setting up nicely. Those are things that you guys can just take from the newsletter itself. And hopefully, it makes you money. I'm pretty clear with my entries and my exits and what I'm looking for targets and stuff. So it makes it pretty simple to use. The other product is, of course, the mentoring. If you guys really want to know how to trade and you want to make it a full-time profession, or you want to do it a little bit, you just feel like you can't put all the puzzle pieces together, or you're so close but you just can't quite get this to match, then the mentoring is definitely the way to go. That's a full, very in-depth course. It's basically college education and trading, and I'm with you forever. So when the course is over, I'm still at your disposal for the rest of your life. There's no extra charges for that. You can just write me an email. I'll send you more information on it if you're curious. Otherwise, we'll see you in the newsletter. I do that again. Once again, I went over my Elliott wave count again tonight in tonight's newsletter. Probably try to cover that again on Sunday. And then next week is Thanksgiving, so probably one video next week. Try to do a Monday, Tuesday video and let you guys know what's going on, keep you up to date. And until next time, you guys take it easy. Bye.